they're also looking to, I think the Shanghai Gold Exchange, they're opening vaults like in third countries, like they're opening one in Saudi Arabia. So I think it's all part of making the yuan, the renminbi, more international. That's what it's about, and I think it's highly significant, and it's gonna continue to put pressure on COMEX and LBMA, because this is all physical gold that they're working with, and it will facilitate trade, and people will trust more. That JP Morgan made a research that if there's 0.5% of foreigners reserves in dollars, if that flows into gold, just half a percent, it would drive the gold price to 6,000 by 2029.
Recent reports confirm that the Shanghai Gold Exchange International, SGEI, is establishing a vault in Saudi Arabia. This strategically positions China, allowing exporters to convert yuan directly into physical gold, bypassing the US. It also supports the idea that China will play a bigger role in gold pricing. Additionally, JP Morgan's research suggests that if just 0.5% of foreign US dollar reserves were to shift into gold, it could drive the price to $6,000 by 2029. Mario Innecco reveals that gold has entered a new bull phase, which began in early 2024, after a prolonged consolidation since 2011, primarily driven by unprecedented central bank buying. On October 14th, Reuters reported that China is taking steps to shape the pricing of the vast quantities of industrial metals it produces and consumes, with moves to attract foreign companies to trade on Shanghai's futures exchange, which would eventually fragment global markets. If the initiative succeeds, Shanghai's contracts would achieve benchmark status and upend the system for reference prices of industrial metals in place since 1877, when the LME was established. Shanghai Futures Exchange benchmarks would eliminate the need for Chinese firms to link their physical contracts to LME prices and create a need for foreigners to trade on Shanghai Futures Exchange to influence reference prices in their contracts, shifting market sway from the West to China, the report noted. Wang Fenghai, general manager at the Shanghai Futures Exchange, told Chinese state media in June that the country must internationalize its markets if it wants to exert international influence on metal prices. Only through opening up can we draw in foreign investors, participate in the process of Shanghai Futures Exchange's price establishment, and therefore enhance price influence, he said. Before we dive into video clips, make sure to subscribe and hit the notification bell so you don't miss out on more content like this.
I think long term, we've been in a bull market since 0102, but then we had that correction and big consolidation for like 13 years, from 2011 till actually beginning of last year when we broke out. So long term, it's been 11 years, but I think this is a new leg now. So we're still like in the first few innings, if you want to use baseball terminology, maybe the third inning. And I think we're only just beginning. Yes, we're going to see a lot of ups and downs and noise in the short term, but longer term, I think one needs to just hold on to it and go for the ride. Central bank buying, and also the Basel III rules regarding gold as a high quality liquid asset in tier 1 category. And I think China as well, they've been huge buyers. They've been encouraging the public to buy gold. They also told insurance companies now since February that they can put up to 1% of their assets into gold. And the Chinese, they buy gold, they buy real physical gold. They don't do the futures. So I think that's also hurting the paper game on COMEX and LBMA. And it's one of the reasons why I think the gold price is accelerated. And also the debt situation in the US. We've seen the big, beautiful budget according to Elon Musk, now is disgusting, and I agree with him. So I just saw a meme that said, how do you solve the problem with too much debt? And then there's Trump, more debt. So I don't think there is a solution short of triggering an economic collapse, a Great Depression to write off the debt. And I don't see politicians doing that in the US nor in Europe. So we're going to continue to see. Saw that Donald Trump Jr. With a gold company that he works with, they're talking about some kind of real reset. It's only speculation, but I think it will become important part of the BRICS payment system, gold, because when you substitute the dollar as the major reserve asset, no other currency will do as a reserve asset currency because it doesn't have the credibility that the dollar used to have. I mean, the dollar is still running on fumes, so to speak, because it used to be as good as gold, supposedly, until 71. So the only reserve asset that BRICS and other countries will trust is gold. So that's why people speculate always about BRICS. But I think the other important thing to keep an eye out in the BRICS summit is how many more nations asked to join. And I think that's very significant. Saudi Arabia still seems to be sitting on the fence because I don't think they want to upset the US, but they're kind of 1 foot in BRICS and 1 foot still in the old petrodollar system.
Mario Innecco highlights that the EU has effectively adopted Basel III. With the core reforms already applied in early 2025, the only remaining piece is the market risk FRTB, which is now scheduled for implementation in January 2027. This shift is significant because it favors holding real gold over paper gold, which weakens the LBMA and COMEX systems that rely heavily on leveraged, unallocated gold. During the COVID-19 pandemic, the fragility of the paper gold market became clear, prompting the BIS to push for reform. China, in turn, has adopted Basel III and is actively working to internationalize the yuan by backing it with physical gold and establishing Shanghai Gold Exchange vaults in countries such as Saudi Arabia. This effort makes yuan-backed trade more credible and puts additional pressure on Western gold markets. China's strategic moves, including the opening of the Shanghai futures market to foreign investors, suggest that gold and silver pricing will increasingly shift to the east. While the West appears to downplay gold's role, China continues to buy heavily and likely holds more than it publicly reports. As this trend intensifies, the dollar's credibility as a global reserve currency diminishes, with gold emerging as a trusted alternative. Silver, often lagging behind gold in bull markets, historically outperform once it gains momentum. Many expect silver to surge once key price levels are broken, making it a valuable complement to gold holdings, requiring patience but offering strong upside potential. Now, let's dive into the interview.
The EU banking sector, they adopted Basel III vis-a-vis gold in 2023 already, beginning of 2023. The UK and the US haven't, and the US is supposedly, that's the thing about Basel III. It's not very clear, and you've had the LBMA come out and say a few things that basically negate the whole story. But I think, yeah, the US banking sector, they're looking to adopt Basel III and gold as a tier 1 asset. And all that means is that allocated physical gold is going to be like risk-free, and unallocated won't be. So banks will prefer to have physical gold. And I was listening to another commentator the other day, and he said that the reason the BIS, who does the Basel III regulations, they saw that during COVID, there's a major trouble with bullion banks, LBMA and COMEX, because it was highly leveraged, unallocated, and the market almost collapsed more. The yuan, if you can exchange it readily for gold, and if you can keep that, the vault is in your country, that's even better. They're not just talking about Saudi Arabia, but Singapore, Hong Kong, and other places. There will be Shanghai Gold Exchange vaults. And yeah, so that's how I see the China situation. I think they're Gold and silver will be priced from China in the next few years. They're going to take over. And yeah, unfortunately, like you said earlier, the West doesn't seem to care about gold, but China does. And I think the amount of gold that they say they have officially, the PBOC, is a very small number. I think they have a lot more that we don't know. So yeah, I'm not defending China here. I'm just stating what's going on. I remember back in 2002 when gold started rising, silver only really started taking off in 2005. And if you look at the 1970s, I think silver was like trading sideways from 75 to like 79, going nowhere, and all of a sudden it just took off. So I think silver will eventually take off. It could be very soon if we break that 35 level. And yeah, every bull market since the end of the Bretton Woods system in 71 that we've had in the precious metals, silver's always outperformed, but sometimes it takes a little longer for it to do so. And yeah.
The global gold landscape is undergoing a seismic shift, with China at the forefront of this transformation. Through the expansion of the Shanghai Gold Exchange, the strategic accumulation of physical gold, and the promotion of yuan-backed trade, Beijing is challenging the dominance of Western financial systems. As central banks diversify away from the US dollar and embrace gold as a stable, risk-free asset, the foundations of global monetary power are being redefined. Investors and nations alike are beginning to recognize that real, allocated gold, not paper promises, may be the ultimate store of value in an increasingly uncertain world. How might China's gold-backed strategy impact the long-term stability of the US dollar as the world's reserve currency? Could silver's historical tendency to outperform in bull markets make it an underrated asset in the current shift toward precious metals? Let us know what you think in the comments below. If you found this video valuable, please give it a thumbs up, subscribe to the channel, and turn on the notification bell so you're always up to date.